morning, Steve here in Chicago. I hope everybody had a good weekend. Lower trade, more technical selling as we trade beans below 11.70, corn below 4.50, and wheat below $6 in nearby Chicago. Outside markets relatively quiet with stock a little bit lower, dollars a little bit higher, crude's unchanged, and gold's a little bit lower. As far as financial is concerned, again, the markets are waiting to see more economic data to see if the Fed will cut rates in September or keep them unchanged. There is a talk that maybe people are looking for a lower dollar by the fourth quarter, and that overnight most commodities are lower, and I think that that's a concern about demand. And in the grain room, I think the market is looking at 10 days of warm, dry weather across the central Midwest. Rains will be confined to a line from Nebraska up into Minnesota. Then the ridge kind of moves a little bit to the west next week, allowing for cooler temperatures. And depending upon the tropical disturbances, will depend upon how much rain the eastern Midwest gets versus maybe none at all. The temperature here in Chicago, we might tie a record from 1887 at 96 degrees. We expect that the crop ratings for corn will drop maybe 2 to 3% today, and then we'll see what the soybean ratings do. Soybeans are just kind of holding on, and they can do nothing for a while, and the rain will perk them right back up. So when we look at some of the private estimates of the S&Ds, the market, I think, is concerned about the fact that one private group looks for old crop bean carryout to go up to 400 million bushels versus USDA's 350, and they got 500 plugged in for 24-25. Over in the corn, they have a little bit lower carryout, 1937 versus the government's 2022. But for 2024-25, they almost have a carryout of 2.3 billion versus the government's 2.1 billion. And in the wheat market, basically looking at a carryout of 730. Despite the USDA 759, but that's still up from 691. We've got a report at the end of the month in which the market is looking at the possibility of higher corn acres, lower bean acres. June 1 stocks around the 690 carryout in wheat versus 570 last year. Corn stocks 4.9 billion versus 4.1 billion last year, and soybeans a little over a billion bushels of beans on June 1 versus 795 last year. So funds continue to be short. Last week they added to their short positions in beans and soybean oil. Took a little off of meal, about unchanged in the corn, short 212,000 contracts, and also short about 45,000 contracts of wheat. So we're looking at the lower trade, technical selling below some key support levels. Weather is going to have to change fairly soon to warmer and drier extended after this week in order for the market to rally.